Hi guys. Today we will analyze BlackRock stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock was a bad performer in the overall market in 2021. The long-term trend is still negative, but the short-term trend is positive. We need to see a little more continued positive action to open a long position. Strong support level is around $687. The next strong support level is around $600. Resistance level is around $777. The next strong resistance levels are around $828 and $955. In the last month the stock has been trading between $660 and $784 range, which is wide. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 0.85 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Intrinsic values calculations. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. The excess return model. This approach is used for financial institutions where free cash flow is difficult to estimate. Then, we will use valuation based on earnings per share, EPS, 5-year average PE ratio and expected growth rate. First model. Excess return model valuation. This spreadsheet contains some financial data that we will use for the stock valuation. In this valuation I will use margin of safety. 30%. Once we actually figure out what we think this stock is worth, we are only going to buy the stock if it gets 30% of what we think it's worth. It gives us a big margin of safety if our predictions are wrong. In other words, when something is worth $1, I want to pay only 70 cents for it. I want to be conservative with financial institutions. So, my margin of safety is 30%. According to our formula, the fair value of the stock is $901.50. When we apply the margin of safety to that value, the fair value of the stock would be $631. That's the price that I may want to pay for this stock. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for BlackRock is 38.22. Minimum rate of return. I will use 10%. Because when we invest in individual companies, we are looking for a higher return than the S&P 500. For BlackRock, analysts forecast growth rate around 9% per year in next 5 years, and future PE around 18. I will use three different scenarios for BlackRock Company: bad, average, and good. First scenario. BlackRock will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 5%. Future PE would be low, 14. In this case, the fair value of the stock today would be $352. Second scenario. BlackRock will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 7%. Future PE would be average, 16. In this case, the fair value of the stock today would be $477. Third scenario. BlackRock will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 9%. Future PE would be high, 18. In this case, the fair value of the stock today would be $634. As you can see, today the stock is overvalued, $769, even if we expect BlackRock's high performance in future. Both the profitability and financial health of BlackRock have some concerns. The stock is too expensive at the moment. It does show a decent growth rate. I don't think the stock is a bargain at current prices. $600 is my buy range for BlackRock. I think Rowe Price stock is more attractive today. Company's strengths. BlackRock is the largest asset manager in the world. BlackRock provides investment management, risk management, and advisory services for institutional and retail clients worldwide. Its range of products includes separate accounts, mutual funds, the iShares franchise of ETFs, and other pooled investment vehicles. Assets under management were $10 trillion as of the end of 2021. With some $3.3 trillion in ETF assets under management, BlackRock's franchise is the largest ETF provider, well ahead of second-place Vanguard. The iShares franchise has allowed the company to dominate the ETF market, with strong organic growth in the US and Europe over the past year. BlackRock's product mix, technology platforms, and capabilities leave it well positioned to remain a best-in-class asset manager. There is healthy growth potential from equity and fixed income ETFs as well as alternative-style funds, which will likely enhance BlackRock's asset inflows as new funds gain traction. Analysts encouraged by the potential of the small, but growing Aladdin risk management platform, and see this capability as a factor in widening BlackRock's competitive moat versus peers. BlackRock has impressive margins and a rock-solid balance sheet. BlackRock has a return on equity of 16%. This is comparable to the industry average of 18%. Its profit margin of 30% is in line with the rest of the industry. The revenue is expected to show a medium grow, by 9% on average, over the next 5 years. The earnings per share is expected to grow by 10% on average over the next 5 years. Risks. BlackRock operates in the highly competitive field of asset gathering, and growth requires consistent asset inflows. Growth in asset management fees also depends on global market appreciation. The asset management industry is also highly regulated, with changes in regulation often resulting in high compliance costs. The sheer size and scale of BlackRock's operations could end up being the biggest impediment to the firm's long-term growth. Movements in equity market prices, interest rates, credit spreads, foreign exchange rates, or all three could cause the value of the firm's managed assets to decline, which would result in lower investment advisory and administration fees, impacting operating income and cash flows. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.